Monday, October 31st, market analysis. Good morning, Stan Ehrlich. A little late today, 10:30 California time. Still 2.5 hours left for the market. And as usual, I start out with my stock market indexes, the SPDR in particular, SPY. And like the other indexes, the SPDR today so far has an inside trading range day. That means the high is no higher than yesterday's high, and the low is also higher than yesterday's low. So it's trading within or inside yesterday's, that's Friday's, price range, which was a very big price range. On Friday, we opened around unchanged after having a small couple of days down on Wednesday and Thursday, and ran up and made new highs for the whole trend and closed very strong as well. But as you can see, I've got a variety of lines in here around this 389, 390 area, a little above and below. And now those are resistance lines, and we stopped on Friday near the high, opening lower this morning, a couple of points, and going up and down a little, but not too much either way. Currently, we're now down about 2 points lower on the day on the SPY. The DIA is a little stronger, the Dow Jones ETF. It is down only about 0.6, a little over half a point, but did not make a higher high, came very close, and the low is significantly above the low of Friday. The DIA has gone up much better, much faster than the other indexes, and it's probably because of their expectation of interest rates. Remember, small capitalized cap companies need to borrow money more often, more frequently, and more of it, and therefore it costs more when rates go up. Not good. But the Dow 30 is well capitalized and does not need to borrow as much as often, etc., and is not as affected by high rates. So as rates show a tendency to flatten out or even maybe go down some, the DIA comes up much quicker and faster, or has come back up much quicker and faster. So we have the QQQ, much like the SPDR, around where the market opened on the Qs, almost exactly, and an inside trading range day, no higher, no lower. Looks good. I don't think we're going to be seeing too much decline. I'm not expecting any significant downside movement. Today, it might stay a little lower on a closing basis, maybe inside the range that's already created. Even a lower low by a modest amount wouldn't do any damage. So the indexes look okay to me. I'm still looking for higher levels. My minimum upside objective for the short term here is 403 to 410 on the S&P 500, the SPDR. 403 to 410 for the SPY. Now, let's look at the October lows, which are obviously now in place on October 13th with a gigantic bullish engulfing on the daily data charts. This is a weekly chart showing you the October lows this year, and we are significantly away from those lows, so it has happened past tense. And I think it's going to carry another month or two higher. That 403 to 410 minimum upside objective on the SPDR is not necessarily my highest objectives. A year ago, we had an excellent buying opportunity in October, around October the previous year, October the previous. The history of the October lows goes back about 30 plus years and has around a 90% likelihood historically of happening again next year. And this is what I said before October this year, which it did happen again. So let's look at the interest rate futures real quick. Whoops, I have a bad habit of minimizing or resizing instead of going to my next charts. We're down slightly on Friday, meaning rates went up bank to bank, day to day, very short-term rates, a little bit on Friday, and we're relatively stable, down just a hair this morning on both the 10-year and the 30-year long bond. So no particular significant moves there at the moment. Let's go look at some futures. Now I'm going to change my tactic here. I'm only looking at those futures that are either currently overbought or oversold, giving us a warning they're about to turn up or down, or they have, and this is heating oil, some other feature that I'm interested in pointing out. Heating oil has the distinct possibility of a broad double top formation, the first time with a bearish ER automated signal on the high of the trend in June, allowed for a 2-month decline. Now we're back up to about the same prices a few days ago and starting to slip down. First decent day down today. Way too early to say that it's a double top, but this is how they start. So why not mention it? Next, sugar. We got an excellent sell signal a couple of weeks ago on the top of the rally, but now we've been oversold Wednesday, Thursday, Friday last week, and yep, here we are rallying up fairly quickly and sharply for today. The overall trend is difficult to define. It depends upon how far back you want to look. If you're looking back over a year, you really have a gigantic sideways trading range, 16 to 19, something like that. But if you're looking at the last couple of months, you could say the trend is up. You've got slightly higher highs and slightly higher lows. And being oversold allows for a little bit of a rally, maybe up to 1850, nothing spectacular. Next, we got another sell signal on heating natural gas at the top of the market, the high day. That's what the system is built for. We did get oversold about a week ago. I mentioned it at the time. And now we've seen, after a couple of days of slippage, slightly, no lower low though, we now have a higher high. So, you know what how they define a trend in general? Higher lows and higher highs over time. Now, this is not much time, certainly, but at least we've got the higher highs and higher lows over the last week and a half or something. I can't say that I'm bullish. I'm a slightly friendly, maybe up to 7.00. We'll see what happens after that. Next, buy signal on the bottom of a double bottom, the first of the two lows, and this is the Dow futures, the YM. And when I've mentioned already that the Dow has had a gigantic rally, excellent, but it's very overbought, people. This is not a good place to be buying on the stock market in a general sense, in particular anything in the Dow Jones 30, because on the average they are overbought substantially, very overbought. So they're probably going to have a decent downside correction here shortly. And I mean very shortly, like starting today or tomorrow. I'm not sure how that's going to pan out on other indexes, but we'll see. And let me resize this real quick because that has been goofed up a bit. The soybean meal, we got a buy signal on the bottom a few weeks ago. A sharp rally this morning pushed it into overbought territory, very, very slightly, but nevertheless overbought. Plus it tested resistance, overhead resistance, and I expect it to pull back very slightly. The overall trend is pretty neutral. So I'm not sure whether we're going to see a bullish breakout to the upside or a significant amount of retracement back below 400 again. Momentarily, because it's overbought today, I'd expect a few days down. Next, bean oil. Pretty much the same comment. 67.60 has pretty good support, maybe 68. and we're overbought, except for yesterday, Friday, during the last several days, except for the one Friday. So I am expecting it to top out and start to have a pullback toward, again, probably 68. Next, coffee, extremely oversold. I went to the effort of putting a little arrow under Friday's low. If you saw the Friday recording, you will hear me say, I'm expecting this to turn around immediately. That's why I put a green arrow down there. And it has today, so far. We're up 740 and near the high of Friday. I'm expecting more of a rally, probably up to about 190 and maybe up into the 197 area during the next couple of weeks. Next, rough price. Again, very, very oversold, extremely oversold. You rarely see oversold conditions that get down into the 5 level for RSI on a daily data chart. It just doesn't happen very often. So we have a huge rally today, not surprising, and a little bit of strength starting on Friday, starting to get us out of the oversold territory, but definitely out now. But the rally is so big today, it's already gotten up to the resistance area. You might see a little bit more upside follow through. It's a little iffy. I wouldn't be surprised if it turned around this price level and started to make new lows for the whole trend. This was a significant downside breakout for about a week last week, and that's usually longer term bearish. Next, oats, little oversold, little rally. I can see it gapped up this morning, so gaps are almost always filled, so I'll probably come back down to fill that little gap, but nothing particularly profound here. The trend is down. I'm looking for lower levels, and a good area to potentially sell short would be around 412. Next, cattle, overbought last week, early in the week, did top out like I expected, and now we're seeing it gap down lower than last week's lows. And although the gap is probably going to get filled on a little bounce in the next day or two, I'd be looking for something in the 150 area, 150 and a quarter, significantly lower. We've got some pretty good sell signals in the past here in live cattle. Next, 10-year notes, some great historical trades. The last one didn't work. It may have lost a little money, but we did get oversold recently, and I've talked about this once already in the bond and the 10-year note charts. So I am expecting maybe a little bit more of a dip and then more of a rally. I think we're seeing the beginning of the bottom formation for the interest rate futures. Next, cocoa. Fairly neutral, not much to say. Probably shouldn't have had it in this little group. And the 10-year long bond is oversold, but did bounce. And the same statement goes for the 30-year long bond as the 10-year. I think we're in the beginning stages of developing a bottom formation for the interest rate futures. Stay tuned. Gold, gigantic bullish engulfing on the first low of a double bottom. Excellent. Had a great little rally. Came down. So far, double bottomed out on the double bottom formation. Had a bounce. And now we're slipping back down for a couple of days. So it needs to hold above those lows of 1,620. And it also needs very soon, this week I would expect, closing above 1682. Above 1682 in a closing basis, and we probably have a good double bottom, and it should challenge the 1738 breakout level of the double bottom. And if it can do that and rally above that on a closing basis, then we'll see a move back up to probably 182, 1,820, 30, somewhere in there. A pretty substantial rally, but the double bottom is still in the forming stages. Next, E-mini, October 13th, you know it. bullish engulfing. Most of the indexes, October lows, looks great, acting great. Today we're down very slightly, no big deal. I'm looking to buy breaks on the average. I'm looking to ride it up as best I can for a short period of time until it gets overbought, and take partial profits or profits and do it again and again until I have something significant on the bearish side to talk about. Next, platinum. Got the top of the market way back there, March 9th, and a major high, to say the least, November 16th of 21, almost a year ago. Lately, we've got a little bit of a bullish price action, new highs on a closing basis, now coming back to some support. I'm looking for it to turn back up again very, very soon. And that's pretty much it. I'm now into some neutral territory symbols. I wanted to talk about sector stocks. I started to talk about these on Friday for the first time. If you have a sector that has a significant buy or sell signal, I expect that the market, the sector symbol, the components, most of them will have signals also, obviously the same signal, buy signals, and on the same day. Therefore, you're probably going to have the whole sector, and as a result, most of the parts of the sector move in the direction of the reversal signal. In this particular case, it was a very good bullish signal, and we had it on October 13th. No surprise there. A lot of markets turned. This happens to be the real estate. Next one is IYR, and that had the same October 13th bullish signal and is a new high ground, yes, Friday and today. Next one is the banking sector, and it bottomed out with a little bit of a double bottom, but the bullish engulfing was on the date of October 3rd and is still good and making new highs for the trend now almost exactly 1 month later. SMH is the semiconductor sector. What a great buy signal, smack dab on the bottom with a complementary buy signal a few days later as well. XLB, S&P Materials Spider. We had a bullish engulfing, but it didn't get oversold on the same day or within a few days earlier. Therefore, I could not justify, the code could not justify turning the price action green for an actual ER bullish engulfing signal. Came very, very close. It is working, but with code, it's either black or white, either yes or no. So I'm liking what I'm seeing, but this is an example of a double bottom. I didn't get any signals per se, but it came super close. XLK is the next one, the tech sector spider, bullish engulfing at the bottom, great turnaround. 2 more to go. XLU, utilities spider. Here, I want to point out that we got extremely oversold and the market did turn back up. Now, this is not outright literal buy signal. It is a warning, which I use frequently, and it worked. But again, there's no exacting way that I have developed to take advantage of this. It's just a warning that you're not supposed to be going short when you're oversold. And this is why. We did get an excellent sell signal back here on August 19th, which turns out to be the first high of a double top. Not bad. And the last one, XLY, we got a bullish engulfing October 13th again, a super powerful date. It's going to go down in history as being a very profound one. Nice turnaround. Expect to see a new high for this group real soon. Forex, last group. Euro dollar, bullish engulfing on September 28th. And a higher high has been seen late last week. And Thursday, Friday, and today we have a little bit of a dip. I'm expecting it to hold at slightly lower levels. Not sure exactly where. I'm not going to pinpoint it. But I do think that within a week, maybe at 2 weeks at the most, we're going to see new highs for the trend, with the exact opposite situation in the dollar index, with a bearish engulfing on the top on September 28th. Same situation, except in reverse. I expect a little bit more strength short term and then lower lows. Have a great trading day, and this is Monday, so have a great trading week. I'm looking for a strong week in the stock market indexes this week. Take care. Thanks, Stan Ehrlich.